Hello everyone, today I want to talk about something that has been on my mind, a situation that really highlights the volatile nature of our financial world and the importance of smart money management. I am referring to the recent price increases for the Steam Deck. I know for many of you this might seem like just another tech update, but for me, someone who has learned tough financial lessons, it is a stark reminder of how quickly things can change and how crucial it is to be prepared. Let me rewind a bit and share my own journey, a journey filled with financial missteps and the painful lessons that followed. When I was younger, in my early 20s, I did not understand the logic behind investing. I was easily swayed by the promise of high returns, the kind that whispers sweet nothings of quick wealth. I jumped into the market following trends, buying popular stocks without truly understanding what I was doing, and listening to every bit of hearsay. It was a cycle of chasing gains, selling in a panic, and ultimately losing money. I fell into so many traps. Short-term speculation led to significant losses. I believed in schemes that promised the moon and delivered nothing. I did not understand risk management, putting too much money into single investments and making emotional decisions based on fear and greed. All these mistakes, one after another, cost me a significant portion of my hard-earned savings. It was a painful period, one that forced me to confront my financial illiteracy. The wake-up call was harsh, but it was also necessary. After those substantial losses, I realized that my approach was fundamentally flawed. I started to educate myself about proper financial management, shedding the get-rich-quick mentality. I shifted my focus to steady savings and low-risk investments, understanding that wealth building is a marathon, not a sprint. Now, I no longer engage in aggressive investing. I view finances through a rational lens, and my passion has become sharing my failures, my lessons, and my foundational principles for newcomers. This brings me back to the Steam Deck price increases. Valve, the company behind it, has removed the lowest tier of the Steam Deck, focusing solely on the OLED models. The price of the 512GB OLED model has gone from $549 to $789, a $240 increase. The 1TB OLED model has seen an even steeper jump from $649 to $949, which is a $300 increase. This is almost a 50% increase for the top-tier model. Valve attributes these changes to the current cost of components and global logistical challenges. While these are valid reasons, the magnitude of the increase is truly surprising. Many of us expected some price adjustments, perhaps $100 or $150, but this goes well beyond those expectations. It feels like we are rapidly approaching a point where the average working person might be priced out of this hobby if they want modern hardware. This decline in affordability is quite striking. I understand it is not entirely Valve's fault. Component costs are indeed high. Partly due to the massive investments in AI across various industries, I get that. However, this price increase, for me, raises questions about value. I do not own a Steam Deck myself. I am not typically a handheld gamer, so I never got one. But this situation paints a concerning picture for other upcoming products, like the Steam Machine, which I had considered getting. A major selling point of the Steam Machine was its anticipated lower price point compared to a traditional PC. If these current price increases are any indication, that might no longer be the case. It is like a warning signal suggesting that the Steam Machine could be significantly more expensive than initially thought. I am not saying it will be as costly as a high-end luxury vehicle, but based on these increases for existing hardware, and with so much unknown about the Steam Machine, I err on the side of caution. It might end up being similar in price to an actual PC, which then makes you wonder about its unique selling proposition. Valve has confirmed that the Steam Deck itself has not undergone a drastic overhaul. The price hike is solely due to increased component costs and global factors. They have promised to keep the community updated, but I am not holding my breath for any price reductions soon. I genuinely do not see that happening for a long time, if ever. I am not trying to be a pessimist, but I mean that sincerely. As I have said for months, I expect this trend of price increases to continue across many different products and industries. That is just the current state of the world. While some of these factors are indeed beyond Valve's control, the size of this price increase was still astounding to me. It nearly knocked me out of my chair, especially considering the Steam Deck has often been sold out, with many people struggling to get their hands on it. Now, those who have been waiting are facing a much higher price point. It feels like a double blow, I am going to be frank. I question if this price increase is solely indicative of component costs, or if Valve simply believed they could get away with it due to the high demand for the Steam Deck. My reasoning behind this thought comes from observing other companies. For example, the Nintendo Switch 2 also saw price increases, but Nintendo gave consumers a significant heads up about the impending change in Valve. In this case, the price increase was immediate. The Switch 2's price went up by around $50. Yet the Steam Deck's increase is over $200 for one model and $300 for another. While I acknowledge that the Steam Deck hardware is more advanced than the Switch 2, these increases feel extremely high. Nintendo also has the advantage of being able to absorb some costs through the sales of its first-party games, which might have helped keep their console price increase more contained. Even factoring that in, Valve's price hike still seems astronomical. It makes me wonder if this is truly the baseline they need to sell these devices at, given the component cost increases, especially when compared to the significantly smaller increase for the Switch 2. The demand for the Steam Deck has been ferocious. Is there a chance Valve decided they had to raise prices due to components, but also figured people would still buy it? Regardless, so they pushed the price a little higher. That is just a thought, a theory, but it is something to consider given how much higher these increases are than anyone expected. Beyond the immediate impact on gamers, this situation also serves as a broader illustration of economic forces at play. The global supply chain, material costs, and even geopolitical events can ripple through industries, affecting everything from our daily groceries to high-tech gadgets. For someone like me, who once approached personal finance with a naive optimism, these events are a constant reminder of the need for financial resilience. I used to believe that hard work alone would guarantee financial stability, but I have learned that understanding macroeconomics and microeconomics, even at a basic level, is crucial. It is about anticipating change, adapting to it, and making informed decisions rather than reacting impulsively. My past mistakes taught me the hard way that blind faith in market trends or the allure of quick profits can lead to significant setbacks. I remember one particular instance where I invested heavily in a company based purely on a tip from an online forum without doing any independent research. The stock plummeted, and I lost a substantial sum. It was a bitter pill to swallow, but it ingrained in me the importance of due diligence and critical thinking. This is why when I see price changes like those for the Steam Deck, my mind immediately goes to the underlying economic pressures and how they might affect individual consumers and their financial plans. The discussion around component costs and logistical challenges is not just an excuse for higher prices, it is a real factor. The increased demand for semiconductors, driven by industries like AI, electric vehicles, and data centers, has indeed strained supply chains and driven up prices for these essential components. This creates a domino effect. Manufacturers facing higher input costs then have to decide whether to absorb those costs, pass them on to consumers, or find a middle ground. It is a delicate balance, and the choices made can have significant implications for market competitiveness and consumer affordability. For young people just starting their financial journey, these situations can be particularly daunting. It can feel like the goalposts are constantly moving, and that saving for significant purchases or investments is an uphill battle. This is precisely why developing a strong financial foundation early on is so vital. It starts with understanding your income and expenses, creating a realistic budget, and setting clear financial goals. It means differentiating between needs and wants, and resisting the urge to make impulsive purchases, especially for discretionary items that might see frequent price fluctuations. When I was in my 20s, I often found myself in a cycle of earning money and then quickly spending it without much thought for the future. The concept of saving for a down payment or building an emergency fund seemed abstract and less urgent than the immediate gratification of new gadgets or experiences. It took losing a significant chunk of my savings to realize the profound importance of these fundamental financial principles. Now, I emphasize the importance of having an emergency fund that can cover at least 3 to 6 months of living expenses. This provides a crucial buffer against unexpected life events like job loss, medical emergencies, or even sudden price increases on items you genuinely need. Beyond an emergency fund, I also advocate for a diversified approach to savings and investments. This does not mean chasing high-risk, high-reward opportunities, but rather spreading your money across different asset classes that align with your risk tolerance and financial goals. For many young people, this might involve a mix of low-cost index funds, a high-yield savings account, and perhaps some exposure to real estate or other stable assets as they grow their wealth. The key is to avoid putting all your eggs in one basket and to regularly review and adjust your financial plan as circumstances change. The Steam Deck price hike also brings up the broader issue of consumer behavior and market demand. When a product has high demand, even with increased prices, companies might still see strong sales. This creates a feedback loop where strong demand justifies higher prices, which can further fuel component cost increases if supply struggles to keep up. It is a complex interplay, and understanding it helps us make more informed purchasing decisions. For example, if you know a product is in high demand and has a history of price increases, you might decide to wait for a potential sale or consider alternative products that offer similar value at a more stable price point. This experience reinforces my core message. Do not chase fads, do not believe in easy money. And always do your homework. Whether it is a new gaming console, a stock market investment, or a new financial product, approach it with a healthy dose of skepticism and a commitment to understanding the underlying realities. My goal is to help others avoid the same pitfalls I encountered, to provide a roadmap for navigating the complexities of personal finance without the scars I bear. It is about empowering individuals to make smart, sustainable financial choices so they can pursue their passions, whether it is gaming, travel, or anything else, without constantly worrying about their bank balance. The only sliver of hope I see in this trend of ever increasing prices, particularly in the tech sector, comes from statements like the one Microsoft made. When a giant like Microsoft acknowledges that AI is proving more expensive than anticipated or even more costly than human labor. In some contexts, this, it suggests a potential reevaluation of priorities. If major corporations start to realize that the AI hype train is not always leading to the expected cost savings, it might temper the runaway demand for certain components and potentially lead to a stabilization or even a slight reduction in prices down the line. However, this is a long shot, and for now, the prevailing sentiment still leans heavily towards rapid technological advancement, often at an increased cost. So in conclusion, the Steam Deck price increase is more than just a piece of tech news. It is a microcosm of the larger economic forces shaping our world. It is a reminder of the importance of financial literacy, prudent budgeting, and a long-term perspective on wealth building. My hope is that by sharing these insights, by candidly discussing my own financial missteps, I can help others avoid similar experiences and build a more secure financial future. It is about learning from the past, preparing for the future, and making thoughtful decisions today. Thank you for listening.